Hello, dears, welcome to our channel. We are going to talk about today. Introduction to the three key financial statements: balance sheet, income statement, and cash flow statement. The balance sheet provides a snapshot of a company's financial position, showing its assets, liabilities, and shareholders' equity at a specific point in time. An explanation of the balance sheet and its importance in presenting the financial situation of a business at a particular moment in time. A balance sheet is a financial statement that provides a snapshot of a company's financial position at a specific point in time. It consists of assets, liabilities, and shareholders' equity, showcasing what the company owes, and its net worth. Overview of the income statement and its importance in revealing a company's profitability over a specific period. The income statement provides a summary of a company's revenues, expenses, and profits over a specific period, typically a quarter or a year. It offers valuable insights into the financial performance of the organization. Exploration of the cash flow statement and its role in detailing the inflow and outflow of cash within a company. The exploration of the cash flow statement is crucial for understanding the inflow and outflow of cash within a company. It provides a detailed breakdown of how cash is generated and used, including operating, investing, and financing activities. This financial document is essential for investors and analysts as it showcases the company's liquidity and ability to meet its financial obligations. Understanding the interconnectivity between the income statement, balance sheet, and cash flow statement is crucial for gaining a comprehensive view of a company's financial health. These financial statements are interconnected in that the figures from one statement directly impact the others, revealing the relationships between a company's profitability, liquidity, and overall financial performance. Discussion on the importance of these financial statements for investors, creditors, and internal management in making informed decisions. Financial statements are crucial for investors, creditors, and internal management to make informed decisions. Investors rely on these statements to assess the financial health and performance of a company before making investment decisions. Explaining how these financial statements are utilized for financial analysis and decision-making processes. Financial statements such as income statement, balance sheet, and cash flow statement are utilized for financial analysis to assess the financial health and performance of a company. These statements provide key information about the company's profitability, liquidity, and solvency, which is crucial in evaluating the company's current status and potential for future growth. Emphasizing the significance of understanding and interpreting key financial statements for effective financial management and strategic planning. Understanding and interpreting key financial statements is crucial for effective financial management and strategic planning as it provides valuable insights into the financial health and performance of a business. We appreciate you spending the time to view this presentation. We greatly value your input. Don't forget to like, share, and subscribe.